Triple net, what is it? How is it reconciled? And how is it adjusted? What is triple net? A triple net lease is also seen as NNN lease. So a triple net lease is a lease in which the tenant agrees to pay their pro rata share of all the expenses associated with property maintenance, taxes, and insurance, in addition to a predetermined base rental rate. For more information on what is included in more detail, please look at your specific lease, as it will outline what these common area maintenance costs are and if there's anything unique to your property. What is triple net reconciliation? At the end of the fiscal year, the property manager or landlord will reconcile the triple net expenses against how much was paid in monthly for the triple net. For example, if a tenant is paying in $100 a month, at the end of the year, a tenant has paid in $1,200. I want to make a note on reconciliation, as sometimes with new construction, a landlord may wait until year 2 or even 3 to reconcile all the expenses to make sure they have a realistic triple net budget and adjust accordingly. So what is triple net reconciliation? Let's go through an example here. If a tenant pays the $100 a month and has 12 monthly payments and they've paid in $1,200 over the year, if we look at the expenses for this property, the triple net expenses total $100,000 for the year, as outlined below. $65,000 for property taxes, $7,500 for property insurance, $27,500 for CAM expenses. And the tenant's pro rata share is 2.5%. Then the tenant's pro rata share of the expenses is 2.5% of $100,000 or $2,500. So the triple net reconciliation looks like this. The tenant's pro rata share is $2,500 minus the tenant's monthly paid in, which is $1,200. The tenant would owe the landlord $1,300 at the end of the year. Usually this invoice is received by the tenant in January or February after all the expenses for the year have come in. However, you will want to check with your landlord on what is their triple net reconciliation schedule in order to be aware. Let's look at a second example. Now the tenant pays in $250 a month, so a total of $3,000 for the 12-month calendar year. The triple net expenses are $100,000, same, and the tenant's pro rata share is still 2.5% or $2,500. So doing the reconciliation, the tenant's pro rata share is $2,500 minus the tenant's monthly paid in amounts, which is $3,000. The tenant should receive a credit from the landlord of $500. So what is the triple net adjustment? As outlined in your lease, the landlord may adjust your triple net monthly payment in order to avoid a financial gap at the end of the year, as we just saw in example 1. To do this, a landlord usually provides an estimate, but is not required to, for the upcoming year based upon service contracts negotiated, if there's any rising labor rates in the area, estimated property tax increases, insurance, etc. With the estimate of the upcoming year, the landlord usually provides tenants' pro rata share of the estimated cost, but not always, and divides it by 12 in order to get their adjusted monthly paid in triple net amount. The adjusted triple net paid in amount does not guarantee that there will not be a gap at the end of the upcoming year. And this is very important to note, and also plan in your budgets. It will help reduce the gap to the best of the landlord's ability at that point in time, but nobody knows how much often it's going to snow or how much it's going to rain, which will increase lawn care or any other maintenance items at that point. Again, the triple net adjustment is a best guess. Usually landlords try and give this heads up in November and December that the adjustment will start in January. But again, check with your landlord or property manager on the timing that they have. So let's go through an example of a triple net reconciliation. This is a simple multi-tenant property. So the triple net expenses are outlined above $45,000 for property taxes, $5,350 for property insurance, $31,714.16 for CAM, where your total is $82,064.16. The triple net monthly paid in by the different suites. So this property has 6 suites, and you see each tenant has a different amount. So the total paid in is $75,550. The gap between all 6 tenants is $6,514.16. Now, since each tenant is responsible for their pro rata share, we don't take that 6,500 number and divide it evenly among all 6 tenants. It is still based off that pro rata share. So let's dive in to a little bit more details. If your landlord provides a detailed expense breakout, it may look something like this, where your property taxes have one line, property insurance usually has different policy dates between them. Sometimes you do get it to end on the end of the year, so you may only see one entry, and then it goes into CAM. So as you see here, we list repairs, janitorial, elevator. This property did not have one, so we don't have anything there. Snow removal, this property does have some fire hydrants, some pest control, trash removal, landscaping. That does not have any common area utilities, but it does have a city fee that is incorporated as well, and then a property management expense. So all totaled the $82,064.16. Now we look at the tenant's pro rata share. So for suite A through F, you can see each one of them have different square foot. That square foot is basically makes up 100% of what is being allocated, and then you have the percents allocated here by tenant. If you look further on to the breakout, now this is something landlords usually don't provide, just showing how we calculate it on our spreadsheets here to give you some insight. So you have the tenants on the left, you have their percentages based off the total rentable square foot. Then you have each tenant's square foot, you have the total amount that they paid in. You also may have an individual tenant charge here. Again, check your lease for what is noted that could be charged to you here. Sometimes it's HVAC maintenance or some different items that could go in there for repair. Then here's your all triple net cost, and then here is basically the individual cost and the total triple net cost for all tenants. Adjustments, so if your tenant, if you're not in the suite for the full year, you may see an adjustment in this column for the months that you were no longer, or you were not in the suite, and then your total due by tenant. And then you have the total payable, which is basically your total paid in minus the expenses. So you'll see tenant A is outstanding or has a balance due of $1,894.13, while tenant B is getting a credit of $842.35. It all varies based off your pro rata share, what your expenses are total, and what you're paying in. A lot of times, landlords will not negotiate the triple net amount for this reason. They want to have everybody on the same rate. If a tenant ever tries to negotiate a triple net, you want to definitely make sure as a landlord that you are disclosing that the property rate is this and the tenant is negotiating it down. Otherwise, everybody will have a big surprise at the end of the year when you do this reconciliation, because I will tell you almost everyone will forget that they did this adjustment. So what does the tenant usually see for the reconciliation? The tenant usually receives some type of tenant invoice for the balance due or the credit provided. Usually there's the landlord entity and the property name, whatever the tenant's name and address is, what year it's being reconciled, and then you see the high level summary of expenses for the different triple net categories, the total sum, and then the tenant's share of the triple net expenses, any individual charges, And then again, if you take 37% times the 82, you get the 30,394.13. Any miscellaneous adjustments, and then your total. All this pulls from that calculation spreadsheet you just saw. The tenant has paid in a total of 28,500, and then the balance due is 1894.13. And then where to send payments. This may be more detail than your landlord will provide you, but this is an example of our triple net reconciliation leases. The balance due, if it's a credit, may be applied towards a certain month or may be carried forward for the next year. That's something your landlord or property manager will let you know. So now that we've gone through the reconciliation for the year and you've paid or been credited that outstanding balance for that year, your landlord's going to want to adjust to make sure that you're more in line with the current expenses to avoid any financial gaps to the best of their ability. Again, this does not guarantee that there will not be a gap at the end of the year, as these expenses are variable. Usually what we provide is an upcoming estimated cost for the next year in regards to how we are adjusting each tenant. So you'll see here more rounded numbers, not so much down to $4 or $7 on that. And some of these, again, are best guess based off the prior year. So here now our triple net expenses are totaling $8,120. If we use the same property, 123 Sesame Street, with all 6 tenants, we keep their percentages the same. Nothing's changed in that. We didn't add any new spaces. We're guesstimating what they're totally we're going to pay in next year in order to get a zero balance to the best of our ability. So with this rate that we've paid in here, this is the new rate for 2023. This is what they paid in the prior year. This is what we're adjusting them to in order to zero out with our new estimate. This, we just note what is the adjustment between the years. So they were, for Suite A, they were paying $2,084 a month. Now they're paying $2,719.75 a month. That adjustment is $635.75. Again, as you see, some of the tenants have different adjustments based off of their square foot and what they were paying in. Usually you'll receive a triple net adjustment notification. Again, with the landlord entity, the property name, and the tenant. You will see when this adjustment is starting. Sometimes you'll see it here in the middle part of the year if the landlord may be a little bit late in the year on doing the adjustment. Maybe they're waiting for some expenses to come in or credits or corrections. One thing they'll also mention is what's the new triple net amount. And then again, in accordance with your lease, we're providing this notice of adjustment. And then they give you a high level estimate of that detailed budget that we just showed you. Again, some landlords, this is all you will see, or you'll have even a more summarized email. Most landlords I've seen do not share budgets, but again, it's how your landlord chooses to present the information. You can always request what they're basing it off of, just for your knowledge. A tenant's, also then we go down here into a tenant's estimate share of it. So again, this tenant with their percentage, you'll see that total, you're estimating their total triple net costs for the next year to be $32,637.04. So again, if you're paid in at a full year at the new adjustment, you should equal out. So you're seeing here, this tenant is not being adjusted until May 1st, which notes to the tenant, I more than likely am going to have a gap. I need to be aware of this. Also, one of the things in this one I wanted to share is that we disclose down here that just because we are adjusting, that this does not guarantee that there'll be a zero balance at the end of the year, especially as we're not starting on January 1st. That's something just to note. Again, your landlord may or may not point this out to you, so I want to make sure that you're aware of how the triple net reconciliation is done and the adjustment. We also put down here our target time frame. Sometimes we're not able to keep it due to utility adjustments. One property, one year, we had a leak and the water company charged us $4,000. We were not going to pass that over to tenants, so we waited to do the triple net until we had that resolved. So there are many things that could throw off your time frame for adjustment. However, we like to basically disclose here what our target timeline is. So our estimated cost for adjustment for the upcoming year is being reviewed in November. We're giving notice to tenants for adjustments in December that will start January 1st. And then the triple net reconciliation from the prior year will be sent out to tenants in February. This is meant to be a high level review of what triple net lease is and how it is paid in, how it's reconciled, and how it's adjusted. Please contact your attorney to review your specific lease for these details, as this may not be the same detail of expenses in your lease. There may be more, there may be less, but it's used to be a high level guide. Thank you very much for your time.